The first indicator we're going to use is called Liquidity Weighted Moving Average, or LWMA. This nifty tool does more than just track price. It also takes liquidity into account. Basically, it means the indicator places more importance on prices that had higher trading volumes. This approach helps filter out market noises, giving you a clear view of the price trend. By focusing on areas with higher liquidity, the LWMA can better identify a strong support and resistance levels, which is super useful for trading decisions. For this demonstration, we'll be using the Bitcoin 15-minute chart. But it's important to note that you can apply this strategy on any time frame or chart you prefer. Now let's talk about how to add the liquidity weighted moving average, or LWMA, indicator to your chart in TradingView. First, open TradingView and load the chart you want to analyze. At the top of the screen, you'll see a tab labeled Indicators. Click on this tab to open a search bar. Type in Liquidity Weighted Moving Averages and select it from the list that appears. Once selected, the LWMA indicator will automatically be added to your chart. After adding the indicator, we won't be using its default settings. Instead, we'll make some adjustments to ensure the indicator performs well on any chart. Head over to the settings window of the indicator and look for the input section. Here, we'll begin by changing the outlier threshold linked parameter to 9, and this will help better identify any unusual price movements. Next, we'll modify the FastMA length parameter to 90. This adjustment will make the indicator more responsive to short-term price changes, allowing us to spot trend reversals more quickly. Following that, let's adjust the slow MA length parameter to 180, which will enable the indicator to also consider long-term price trends. Lastly, still within the Inputs tab, make sure to turn on the Wait for Time Frame to Close option, allowing the indicator to only update once the current candlestick or bar has fully formed. Now that we've finished adjusting the indicator settings, let's move on to the Style section. Here, we can make the plotter's appearance thicker for better visibility by adjusting the line thickness. Once the adjustments has been made, we'll see a color ribbon displayed on the chart, serving as a simple yet effective tool to determine the direction of the current trend, especially for beginners. When the ribbon appears green with the price above it, consider the trend to be upward. On the other hand, if the ribbon is red and price is positioned below it, interpret the trend as downward. Now that we've covered trend direction, you might be wondering how and when to enter trades. Before we dive into that, don't forget to hit the subscribe button to gain access to over 350 profitable trading strategies completely free of charge. The second indicator we'll be using in this strategy, which will act as our signal generator, is called Zero Lag MA Trend Levels. To add this to the chart, navigate to the indicator section and type its name into the search bar. Once you find it in the results, go ahead and click on it to add it to the chart. This particular indicator combines a zero lagging moving average with a standard exponential moving average, creating a dynamic cloud that helps visualize shift and trend momentum. It also identifies and plots key levels where trend reversals are likely to occur. However, before we start using it, we'll need to make some adjustments to optimize its performance. So head over to the settings menu and locate the inputs tab. We'll change the length parameter to 7, which will allow the indicator to respond more quickly to changes in the market conditions. Next, navigate to the Style tab, and this section will disable the plot options, as we only need the label icons to identify buy and sell signals. And that's all there is to it for the settings. Now you're ready to put this strategy into action. Entering trades with this strategy is a breeze, even for beginners. First, identify the overall trend direction. Look for an uptrend if you're planning to enter buy trade. To confirm buy signal, wait for appearance of a green triangle below the candles, signaling a potential upward price movement. Once you see the signal, you can confidently enter a buy trade. To manage risk in this strategy, set your stop loss order slightly below the most recent swing low. By doing this, you minimize potential losses in case the market moves against your trade. As for the target, use a risk to reward ratio of 1 to 1.5, ensuring your potential profits is significantly higher than the risk involved. While this approach might seem simple, don't underestimate its effectiveness. It's a highly accurate method. Take a look at this sell signal example. We can see red triangle forming above the candle within a clear downtrend. This is a strong indication to enter a sell trade. By applying the strategy's rules, you can avoid trading against the prevailing trend and increase your chances of success. Entering a sell trade follows a similar process, but in reverse. Look for a downtrend with price trading below the red ribbon. Then wait for a red triangle above a candle to confirm a sell signal. Once you spot this, go ahead and enter the trade. For a stop loss placement, set it at the most recent swing high to limit potential losses. As for target, apply the same risk to reward ratio of 1 to 1.5. An essential aspect of this strategy is its ability to filter out counter-trend signals such as buy signals during a downtrend. By considering the ribbon color for trend detection, the strategy helps you avoid potential losses from trading against the prevailing market direction. Overall, the simple yet accurate approach can help you make informed trading decisions and improve your chances of success in the market.